You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I said, we're going parabolic and you're going to need to get, I'm not participating in this move. I'll wait for the retrace to come back in. And so far it's done everything that I've talked about. Now, the key is to find out where the retrace is going and when is it time to get back in. And we do that by breaking it down into the smaller time frame. So right now, I don't think it's a time to get back in. I think you'll get some small rallies and some small sell-offs. Today, gold is selling off a bit, down about 1.5%. But overall, this is healthy.
Welcome back to Mining Stock Education. Hope you're doing well today. Today's show is sponsored by Arcana Silver Corporation. Arcana announced the much anticipated news that they've secured a $28 million debt facility for the final CapEx piece to bring the Revenue Virginia's high-grade silver mine in Colorado back into production. CEO Kevin Drover recently told me in an update interview that they are looking now at April 2021 for commercial silver production, and that of course will be ramped up. But we're looking in Q2 of next year, the highest grade silver mine in the States to be in production. To learn more, go to arcana.com. The link is in the show notes, or you can find it in Toronto under the ticker AUN, or in the States, it trades under AUNFF. Well, today's show, you're going to be hearing from master trader Nick Santiago of InTheMoneyStocks.com. Nick, welcome back onto the show, and let's start off with your precious metals analysis. What is your analysis of what's been happening in the gold and silver price?
Well, right now, if you take a look at the charts, we've been doing just a lot of backing and filling. Basically, the markets, both gold and silver, both went parabolic back in September. So right now, anytime you have a parabolic move like you saw in August and September, you're going to need to do some backtracking. And what that means is it's simply retracing. But if you take a look at a monthly chart of gold, what you'll notice is that when you had the big breakout surge in the month of July, and it was a big move, you went from 1,800 to above 2,000 in August. Anytime you get that parabolic move and you took out the 2011 top, especially on a closing basis, that tells me there's more upside potential. But what we need to do first is put in what we call an ABC structure, ABC retracement, or a zigzag type move down. And we started to see that really beginning right around August 8th, August 7th. Market topped out in gold futures. I believe that high was 2089. Since then, we've pulled back a little bit. Right now, we sit at around 1900. I think we could pull back a little bit further, and then it probably gives us a signal to get long gold. But anytime you go parabolic, just understand you're going to need to pull back a bit and retrace. And I think I even said this on the last time I was with you. I think it might have been back then. I said, we're going parabolic and you're going to need to get, I'm not participating in this move. I'll wait for the retrace to come back in. And so far it's done everything that I've talked about. Now, the key is to find out where the retrace is going and when is it time to get back in. And we do that by breaking it down into the smaller time frame. So right now, I don't think it's a time to get back in. I think you'll get some small rallies and some small sell-offs. Today, gold is selling off a bit, down about 1.5%. But overall, this is healthy.
So you're not in any precious metals or mining ETFs or stocks right now?
I am not. I am completely out. I do hold and own physical gold and silver bullion. I have for many years. Never sold a single ounce, and that's my ultimate insurance policy. So I don't plan on selling any of that. But as far as for trading purposes, or whether we trade the ETFs or gold futures or silver futures, right now I am not in anything. I do not own any gold miners right now either. And but I will be looking to get back into it. So again, it's really all about the chart pattern, but I think we still need to do some more backing and filling here.
Earlier this year, Bank of America came out and said gold's going to $3,000. And then just in the last few days, Citibank came out and said that they can see silver rising to $40 an ounce over the next year. They are pointing out industrial demand increase. Do you think that their projection could be right, Nick?
I do think their projection could be right. I think the timing of it could be, it may take a little bit longer than what they're looking at. I know they're saying 1 year. I don't think it's due to industrial demand at all, though. What I do believe and there is a lot of industrial demand, but really what it's going to come down to is the money printing by the central bankers. And we've seen what has happened recently, especially since the virus scare. The money printing has been off the charts. And in fact, right now, we have the politicians bickering over a potential, $2 trillion stimulus deal. That's going to be another $2 trillion that is borrowed from or printed and borrowed. So everybody has to remember that. All of these are potential upside catalysts for the precious metals, not just silver. But I actually agree with the 40. I think silver will go back and even eclipse the 2011 top, which was basically $50. So, but I think it could take a little bit longer. I'm very bullish gold and silver in 23, 24. I think that's where they just really just explode to the upside. As for whoever it was saying that gold could go to 3,000, I think that's a very, very good case as well. If you just look at the chart right now for gold, you'll take a look at 1999. You'll see that was a major low for gold. That I believe the low there was around $256. And then in 2011, we put a top in at around 1923. So if you just use symmetry on the recent pullback to 2015, gold topped out in 2011, pulled back to 2015. Just do the math. It probably takes you up to around 2,800 just using the symmetry from the market bottom in 99 to the top in 2011. So, ballpark figures, you're looking at 1,900 minus, say, 250. You're looking at a 1,650 point move continuing from the 2016 low, which I believe was around 1050 or 1045. So just add that to the equation and plus 1045, and that gives you a move of around 2,700. So yeah, you overshoot, you go to 3,000 pretty easily.
Yeah, thank you for that explanation. Have you done any analysis of looking at the Fed's response here, just like in 2008? The relation between trillions of dollars printed and expectation of where the general equities go?
Well, the more money that goes that is printed and goes into circulation or it gets leveraged, then it goes into equities. So it has to go into either precious metals. It goes obviously into stocks. They're looking for it to go into commodities. One commodity that's been soaring and roaring has been copper. Copper has been one of the strongest commodities out here. If you take a look at the low in copper, it was 197 in March, and now here we are at 315, 316, and I think copper is going north of 350. So the more money they print, the better it is for all the metals.
What key analysis or metric are you looking at to see when things might crash and turn over? I know you do cyclical studies, you look at years and patterns and so forth. What can you share with us here, Nick?
Yeah, so that's exactly what I do. I always, I always look at what the markets have done prior, and that will tell me what they're going to we look at the past to try to predict the future. It's never perfect, but when you have momentum changes like we've seen in silver and in copper, both of those two metals boomed off the bottom off of new lows. And anytime that happens, you know that you're going to get what we call a major surge. So unlike gold, which had a 5-year pullback in 2016, it bottomed and it took off, it never went back down to its lows that were made in 2009. Copper actually put a low in say 2016, and then it did basically a double bottom, a slight high double bottom in March of 2020. So that tells me this will go back up and probably test somewhere around the 2013 highs, I would think, before it runs into major monthly chart resistance. If I look at something like silver via silver futures, I think, we saw silver go from basically a low of around 1164 in March of this year, and it went up to $30. So $30, it went to $29.91. I don't want to mistake the price there. But we got very close to a 50% retrace from the 2011 top to the low. But silver came off of a new, fresh low pivot, and that tells me that's a power move going forward. Well, we should go up and test the old highs from 2011 at some point in the next couple of years.
Are you making any shorting trades regarding overhyped stocks or sectors?
Stocks, you can do it, but I rarely short anything precious metals because I just feel it's the ultimate insurance policy. Precious metals don't pay dividends, to quote Warren Buffett. He used to call them a useless relic, but now the guy owns a large chunk of Barrick Gold. So, we have to look at I don't like to short them. But I tell my members, if you want to do it, you can. I told them, gold was parabolic. It needed to pull back. It's going to come in pretty sharply. Same for silver. And it did that. But now I would just sit tight and we just wait on patterns. And once we get the setup, I'll be looking to get back in full throttle on these metals. If
you do short something beyond even just the precious metal sector, do you do that primarily through an ETF that's liquid that you can get in and out of?
I will sometimes, or if the market conditions are right, I'll actually short a stock. Just basically sell the stock and look to cover at a lower price.
Naked shorting?
No, not naked shorting. Just shorting, just selling, just a short position, not naked shorting. Whenever you get any kind of opportunity to sell something or short something, you want to make sure your overall underlying trend is down. And we have our overall trend right now is up. So there's very few shorting opportunities out here, in my opinion.
What's the best option trade out there that you're employing?
Recently, I just closed out an options trade yesterday in Viacom, which was a call option. Now today, I have a nice trade in MGM Resorts, ticker symbol MGM. That's a call option that's nicely in the money for us at the moment. So those are two that are one worked out yesterday. I closed it out for almost 25%. I'm in MGM right now. I'm looking for a lot more upside. I'm only up about 10% at the moment. But these, I'm just very selective here, especially going into the election. You're getting a lot of headline risk. You have this so-called $2 trillion stimulus bill that's up in the air. And I think you got a lot of politics being played right now going into this election. Don't forget, the final debate is tonight. So I've really been a little bit on the more cautious and guarded side going into this election.
Is your position still that if Joe Biden wins, you're going to sell everything and immediately start shorting?
Yes. In fact, it's not immediate. It would probably be more so once he takes office. So I do
regardless
think
of who takes the Senate or Congress?
Pretty much. If Joe Biden's in there, I don't think anything good can come from it personally. So if he does happen to win, we'd look for the gridlock situation at some point. But for me, it's not even about any of that. It's really more about the charts and the cycles. I have a different set of criteria for who's in office, Republicans versus Democrats. As far as the president goes, if we get gridlock, that could prolong things a little bit longer if Joe Biden is president. But ultimately, it would be a major sell signal.
Nick, sometimes it's hard to remove our political preferences and biases from our investment decisions. If a critic is listening to us right now and they don't like that idea of selling if Joe Biden becomes president, how would you defend your position objectively?
Well, I wouldn't defend it right now. I would just tell them to wait on the results for 2021 and 2022, and then they could come back and apologize.
Okay. Earnings seasons, of course, is upon us. Any trades for that?
Well, earnings season's always tough. I step aside of earnings just because sometimes stocks can go up very sharply. Sometimes they could go down very sharply. It's gambling. For me, I'm looking at charts. I'm always taking trades based off of the pattern. For instance, I owned Coca-Cola yesterday, and I got out of the trade yesterday afternoon before the close, just simply because they were reporting earnings. Today, the stock's actually up about 65, 70 cents, but that's okay. It could easily be down $2 or $3 today. So I generally do not trade into the earnings announcement. I think it's a form of gambling. I want to always have the odds in my favor every trade, every time out. And I use that via chart pattern. I always know where I'm wrong via stop loss, looking at the chart with a technical stop. Any major pivot low, I will stop out if we breach it. So again, for me, it's all about the chart pattern. I don't get in front of earnings, and I always tell younger traders or somebody that's just getting into this business for the first time, check for earnings. You might win on 2 or 3 stocks that get nice pops after earnings if you're long, but then you could get the Netflix of the world like you saw yesterday, which absolutely cratered, and then you're in a world of pain. And there's a lot of big moves that will take place, especially in these high beta names.
The subscription service that you offer, the best sales for that would be to share with us your net wins from this year versus from January 1st. How much are you up?
Well, if you look, I have 2 services. One is my option service. That is up about 1,000% this year. And my swing trading service is up 164% this year.
Oh, wow. And what was the biggest winners in the option service? Why were you able to get such outsized gains?
Well, it's really just about finding the best chart patterns and locating where these stocks can make big moves. So, for example, the average gain's probably around 25%. I had that in Viacom. And there are times, we'll lose 100% on a trade. But out of all the trades out here, I think we had an 80% winner. That was probably the best one. I'm just looking through my blotter here to see where that was. But I think that was one of the better trades. We had some 50% winners, and these are usually pretty quick too. So again, it's been a really, really good trading year, especially since we had the big crash in March and then the big rebound that took place in late March. So it's been a really, really good year. This time period right now, it's a little bit of a grind. You got to really, really go through a lot of charts to find some good plays out here, but they're still out there. Just got to really work for them.
You've been listening to professional trader Nick Santiago. To learn more about Nick and his service, head on over to MiningStockEducation.com. Nick, really appreciate the update. Thanks a lot.
Thank you, Bill.